This is mission critical. Tesla has 37 days left to do this, and it is exceptionally critical that it happens. It is important for the long-term vision of Tesla's sustainable future, the success of full self-driving and autonomy, the success of robotics. Folks, we've got to do this now. Here's my suggestion, and I encourage everyone in the Tesla community to consider what I'm suggesting. Consider it first, don't just share. Consider it first. And then if you like the idea, share it, which I have a feeling you're going to like it. And here's exactly why Tesla needs to do it. I'll start with that. This quarter is going to suck. Remember, January 1st is a massive cliff for Tesla, but it's the reverse of normal years. So you literally have opposite seasonality, which is really bad in the short term. It suggests that people are better off buying a Tesla January 1st than they are buying in this quarter. Because if they buy in this quarter, they have to wait until their tax return to get the $7,500 tax credit. If they buy Jan 1, they could get it directly via the new IRS rules, which allow that tax deduction, or credit rather, to be received by the dealer and given to the customer at the time of purchase. Some people are like, oh, well, doesn't that hurt Tesla because then it takes Tesla a year and a half to get that credit? No, it takes them 90 days to get that credit because corporations file quarterly. Simple. Anyway, here is the idea. Tesla should immediately introduce an FSD at purchase discount to maximize its take rate. Tesla should offer $5,000 at a new car purchase compared to the $12,000 it currently costs after or at current purchase. There should be a brief 30-day period for existing owners. This means the entire fleet of, frankly, millions of vehicles that do not have FSD have a massive incentive today to flick the switch and adopt full self-driving immediately for a cost of just $5,000. But there is another option as well. We'll get to that. First, there has to be a massive reward for day one adopters. Like when you say you have the biggest sale ever, it should be the biggest sale ever. By the way, don't buy anything at meetkevin.com on Thursday yet. Wait until we actually have a really big reward going up Friday for Black Friday. So stay tuned. This is like the only time I'm going to tell you don't buy. And if you bought in the last few days, don't worry. We've got the same special surprise for you. You'll get taken care of. We love all of you, okay? Always trying to provide more value. But anyway, there has to be a big wedge between day one adopters, that big sale, and reality. Because that's actually giving people real value. Same thing we like to do with the courses. Tomorrow, Black Friday. But anyway, we estimate that this would likely 5x the current take rate. The current estimated take rate is about 7%. Tesla doesn't disclose it anymore. The last time we got 7% was actually Q3 of 2022. So frankly, this take rate number could be like 4% right now, which would like 9x the take rate. And here's the thing. If you actually enable this, consider the math on just new vehicle sales. On 2 million vehicles, this is like a lever, folks. It's a lever that Elon can pull. He just needs to pull it, okay? Take the ego off the shelf and pull the lever. I don't actually think Elon has a bad ego. I actually think he's relatively reasonable and willing to fall on the sword on many things. And I actually don't know that this is taking the ego off the shelf. I actually think this is extremely logical, and I think if he hears it, hopefully he'll agree, because I think he's a very, very intelligent and smart person, and he'll see the light of this. Consider this for a moment. On 2 million vehicles sold per year, at 28% more take rate, that's the marginal difference between 7% and 35%, but it could be even greater. That's immediately $2.8 billion of additional profit per year, which works out to about 90 cents of additional EPS in 2024, increasing Tesla's earnings per share by 22.8%. That is massive. I mean, just consider that for a moment. If right now Tesla is $230 and you have an EPS target of, let's say, $3.94, that means Tesla's trading for 58.3 times. You increase EPS 22.8% to 484, that PE ratio drops to 47, and the PEG ratio gets even more desirable. The PEG ratio would be down at 1.35. Yeah. Now, some people are like, oh, this is just a short-term benefit. Wrong. And we're not even done yet with the suggestion. This would not be a short-term benefit. This would be a massive long-term catalyst, because you have to understand this. Every Tesla that sells without FSD is a Tesla that may end up in the scrapyard never having had FSD. It's crazy. Imagine, okay, maybe this is a little crude, but okay, most of us are dudes around here, and the women who are around here, you know what, they'll probably appreciate the analogy. Imagine when you turn 18, you have to decide to have sex with women or to never have sex with women. And then once you make that decision, you can never go back. That's kind of the analogy we're making, or the analogy is kind of applicable, I believe, to FSD. Because it's either you buy now at $5,000 or you're probably never going to do it. Because $12,000 is excessive. Now, I know a lot of people are like, okay, well, so first of all, the adoption rate will probably skyrocket. Maybe even substantially higher than the estimate that we have of 35%. But there is a potential that when that decision is made at purchase, that it's almost like there will be some vehicles that never, ever, ever have FSD. And that's true, because think about it. Somebody buys it, has it for 7 years. They never get FSD. They sell it to somebody else, and then that person never buys FSD. 7 years later, maybe the car ends up as scrap. It went its entire life without... You get it, right? So, point is, that's lost potential revenue. If you can minimize that up front, then that's exactly what you should do, especially since it's nearly 100% profit. It costs Tesla essentially zero on the margin to do this. So this not just helps 2024. It not just helps Q4, which Q4 is going to be a problem, especially, since usually we have a Q4 rush. Right now we're having like the Q4 anti-rush. If anything, you'd have more of a Q1 push than a Q4 push because of this tax benefit change. It's a big problem. And keep in mind, this is not only a long-term solution, but it also benefits Tesla. You have more capital for Tesla to advance Optimus and invest in FSD technology more. You have more capital available to scale factories faster. You get more users actually using FSD, so more data. You benefit shareholders. You benefit the long-run mission of Tesla. I also believe that the market has priced in the value of FSD at $3,000. That's what I believe. That's $3,000. For some reason, this is apparently turning this into euros as well. So 2,750 euros. That's what I think the value of FSD is based on analyzing the used car market. Okay, so if you consider the used car market and the value of FSD is $3,000, then somebody who pays $12 for it is basically signing up for an immediate depreciation of $9,000. Whereas if somebody pays $5, they're only facing resale depreciation or loss of about $2,000. Now that's actually pretty reasonable. Now you substantially reduce the purchaser risk of opting into FSD, thus reducing the desire of people to just turn on and off Tesla FSD for $200 a month. Also consider this, at $200 per month, your offsetting break even is at $5,000. $5,000 divided by 200 is just 25 months. At $12,000, the break even is 60 months. So, do you want to break even in 2 years buying it versus having a subscription, or in 60 months, in 5 years? Well, come on. By 5 years, people have already upgraded and moved on. Instead, now you motivate people to actually buy it because you're minimizing their resale risk. What you could also potentially do is offer a $300 subscription option, where you include $100 of principal payments towards FSD. So then you have it, you make the $300 subscription payment for 5 years, and then you own FSD when you do the $300 option. If you do the $200 option, you never actually end up owning it. That actually reduces your monthly cost if the resale value is $3,000 to just about $150 per month. It's actually a better deal to pay Tesla more per month in this example. So I highly encourage people to consider tagging Elon Musk or friends at Tesla. I love Tesla. I love the community. I really have massively high hopes for Tesla. I literally am putting my money where my mouth is. Some people are like, oh, Kevin, one day you're like, oh, this is a big catalyst for Tesla, which is true. All the other electric vehicle manufacturers sucking and scaling back their production is a huge catalyst for Tesla. And then I see comments like, oh, and the next day you're like, oh, this is short-term bearish. Both of those can be true. This isn't flip-flopping. We have a short-term, massively bearish catalyst. We are in Q4, which will go down as the highest interest rates ever that Tesla sold cars in, ever. In the life of Tesla's existence, Q4 2023 will go down as the highest interest rates ever. Combined with a tax benefit to wait until Jan 1, Q4 is going to suck unless we pull a lever here. Now, I realize some people will be like, yeah, short-term thinking. Again, every car that doesn't have FSD day one is a car that potentially never has sex. I mean, never has FSD ever. That long-term hurts Tesla. So, what about those who paid $12,000? In my opinion, first of all, you're not guaranteed any kind of benefit or like price guarantee. You are with Meet Kevin if you buy the courses. But again, don't do that today. So instead, with FSD, what you could offer is some kind of reasonable referral credits. There's no guarantee with FSD that prices won't go down. But hey, if you give people like $20,000 in referral credits, they could buy some Tesla tequila and they can drink over it. You know, they could really, think about life with a Tesla hoodie or whatever. The Tesla hoodie is actually really nice. It's really good. And it reminds people, it's like literally built-in advertising. It literally reminds people, oh yeah, I could use my referral link and refer people to Tesla. So you're literally creating advertising, not just with the news of the FSD effort, but also the referral credit part. So in my opinion, this could be the best ad that Tesla makes this holiday season. I know Tesla will hear us if we work as a community to share the message. So, like, share, repost, retweet, whatever, screenshot and tag Elon, whatever it takes. Make Q4 the best quarter ever, hashtag I'm not leaving. I also have a screenshot version of this. So like if you want to take a screenshot of this as one post, and that would make it easier to share, it's right here. Just like screenshot now and then crop it. And that's an option for you. Stay tuned for the Black Friday sale, which I'm excited for. Let me look at some of the other replies that we have here. Let's see here. So waiting until Robotaxi, I don't think we're going to see Robotaxi until 2030, so I think that's a mistake. This literally benefits FSD forever. So anybody telling you this is just like a short-term thing is nonsense. And then the idea of Tesla being compute constrained is quite frankly offset by them having more capital. If they have more capital, you could pay a premium over the other people trying to get chips. Okay, so screenshot and share this, pull the lever. A lot of people here saying FSD isn't good enough to justify $12,000. A lot of comments about this. It's not even worth $10,000, people say. So people are starting to have a conversation about this. Let me know what you think. Thanks so much for watching. Bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.